Welcome back to Crypto Lion. Today we'll be looking at some of the raving news on Bitcoin's price target that you wouldn't want to miss out on. Make sure you like and subscribe to this channel for more videos like this one. A good number of cryptocurrency investors view Bitcoin and its underlying blockchain technology, a digital, distributed, and decentralized ledger responsible for recording transactions in a transparent and unchanging manner, as revolutionary. After all, Bitcoin was the very first digital currency to become investable back in 2010, and its blockchain offered a means of moving money from one party to another without using traditional banking networks. Bitcoin also derives value from its scarcity. Protocols limit the total number of Bitcoin that can be mined to 21 million coins. Nowadays, Bitcoin is aiming to become a primary medium of exchange. There isn't another digital currency out there accepted by more physical and online merchants than Bitcoin. It's also the most commonly paired digital currency when it comes to cryptocurrency investing. In other words, an investor often can't buy an obscure digital currency without first purchasing Bitcoin and exchanging their Bitcoin for tokens in a smaller cryptocurrency. It's this first-to-market advantage of Bitcoin, as well as other factors noted before, that have some Wall Street analysts and strategists placing some very lofty price targets on the world's most popular token. Coming up are some of the craziest Bitcoin price target forecasts. While it's really a game of take your pick when it comes to wild Bitcoin price targets, the following estimates stand out as particularly mind-boggling. The wildest prediction of all comes from an analyst who made use of a prediction model years back and had originally called for Bitcoin to hit $5,000 in 2017 and $500,000 in 2020. However, with Bitcoin merely blowing past $20,000 last year and not scratching the $500,000 per coin valuation, it was believed that Bitcoin's relative scarcity and growing adoption provides a path to considerable appreciation over the next 2 or more years. Most recently, Bitcoin has the potential to reach $146,000 in the long term, as it competes with gold as an asset class, according to JP Morgan Chase & Co. This is fairly realistic, with no specific time frame, and counting on one of Bitcoin's most notable objectives, which is looking more likely. Another prediction left Bitcoin's price per coin at $700,000, with no time frame offered. In the case for why Bitcoin could run to $700,000 per coin, the price target relies on 2 primary catalysts. First, assuming that Bitcoin will replace gold, since it's considerably easier to store and is more secure. Secondly, the opinion that Bitcoin could replace some form of reserves at global central banks over time. Chief to the thesis is the idea that growing mobile penetration will increase the number of non-cash transactions processed by these devices, driving Bitcoin adoption. It suggested that Bitcoin may one day account for half of all non-cash transactions, with the aggregate Bitcoin user network growing to about 400 million users. Also revealed last month was the 250,000 price target by 2022. Though hitting 250,000 might appear crazy on the surface, people have been right before on Bitcoin. When the virtual coin was valued at just $320 in 2014, analysts predicted $10,000 would be hit in 2017, which it was. If you ask me, not minding the probable limitation of these price estimates is ridiculous. While people have certainly been wrong about Bitcoin before, we don't see how any of these price targets are achievable short-term given the hurdles the coin has to beat. For starters, Bitcoin's blockchain technology is considerably slower than its peers when it comes to validating and settling transactions. With an average block processing time of 10 minutes, i.e. the average amount of time it takes to verify a group of transactions is accurate, and the need for 6 validations per transaction, it takes about an hour for a Bitcoin transaction to be completely settled. Meanwhile, some of its peers can complete the same process in a matter of seconds. The Lightning Network may offer Bitcoin hope of closing this gap, but there are no guarantees. Bitcoin has broken below the symmetrical triangle pattern, but the bulls are currently attempting to defend the 20-day exponential moving average, which is set at $34,626. In an uptrend, traders buy the dip to the 20-day EMA as it offers a low-risk entry opportunity, and a bounce off it reiterates the strength in the trend. The 20-day EMA is flattening out, and the relative strength index has gradually dropped from deeply overbought territory to the midpoint, which suggests a balance between supply and demand. If the Bitcoin-USD pair sustains below the 20-day EMA, it could drop to the 38.2% Fibonacci retracement level at $29,688.10. The bulls are likely to defend this support aggressively. If they succeed, this level may act as the support for the range, while 40,000 could act as the resistance. The positive view could be negated if the bears sink the price below the 50-day simple moving average at $27,596. Such a move could open the possibility of a fall to the 61.8% Fibonacci retracement level at $22,106.73. Bitcoin's market capitalization of around $575 billion would have to rise by 4.6 times for a theoretical price of $446,000 to match the total private sector investment in gold via exchange-traded funds or bars and coins. But that outlook depends on the volatility of Bitcoin converging with that of gold to encourage more institutional investment, a process that will take some time. A crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term. This implies that the above $146,000 theoretical Bitcoin price target should be considered as a long-term target, and thus an unsustainable price target for this year. More institutions and noted investors have either started allocating funds into Bitcoin or have said they're open to doing so. While some argue that the cryptocurrency offers a hedge against dollar weakness and inflation risk in a world awash with fiscal and monetary stimulus, others say retail investors and trend-following quant funds are pumping up an unsustainable bubble. There's headwinds for the largest cryptocurrency, with indicators like a buildup of speculative long positions and an increase in investment wallets, holding small amounts of Bitcoin showing potential froth. The valuation and position backdrop has become a lot more challenging for Bitcoin at the beginning of the new year, the strategists wrote. While we cannot exclude the possibility that the current speculative mania will propagate further, pushing the Bitcoin price up toward the consensus region between $50,000 and $100,000, we believe that such price levels would prove unsustainable. The quicksilver nature of crypto markets makes it difficult to answer that question with clarity. Bitcoin's 2017 rally transmuted into a prolonged slump less than a year later. While analysts and commentators have stepped up with optimistic predictions, it's far from certain whether Bitcoin price will continue to increase. Its momentum can be a powerful price propellant. The actions of a single investor can induce others, who don't know much or any better, to follow them into a trade. The price target predictions for Bitcoin bring back memories of 2017, when equally ambitious predictions were made for Bitcoin's future. Back then, the cryptocurrency's astronomical prices fell as quickly as they had arisen, leaving a trail of disappointed investors and shuttered investment firms. But the conditions now are different. Asian investors and retail traders were reported to have driven Bitcoin's previous price increase. They quickly moved in and out of trades, booked profits, and abandoned crypto markets not soon afterward. This move sucked out much-needed liquidity from crypto markets and crashed asset prices. American investors are behind the rally this time around. Institutional firms and hedge funds, interested in parking their funds for the long term, are also beginning to pour funds into the asset class. In the long term, such liquidity should help propel future price increases because it strengthens the market and tamps down the intense volatility that has characterized crypto markets. Bitcoin has already delivered on the call, rising nearly 40% to break through 40,000 with ease. As for the rest of the year, however, investors should brace for volatility that could strike with just as much velocity at the downside before recovering and a potential quadrupling. It is pretty par for the course in terms of Bitcoin's historic moves, and the same pattern that hinted at Bitcoin's looming explosion at 40,000. In 2017, the cryptocurrency rallied more than 1,200%, following the last time the Bitcoin reward for miners was cut in half, in a systemic process known as halving in 2016. The latest halving occurred in May 2020. Not that we're expecting another halving, essentially we hope not. Though if it happens, it's a good opportunity for people to buy into the dip and await another massive rise in Bitcoin. This chart shows a wave depicting a further dip in the price trend. The projection of a flat correction at W, X, and Y zigzag pattern of Elliott wave. Expected A, B, and C correction after the minor subwave at 5. Suppose the price can travel for the primary C wave in the red color, then $29,480 is extremely ready for the target. In this case, this is a longer correction. Then the price can create a new higher high and then fall. Here, Bitcoin's bull flag pattern appears to be fully complete. A lot of traders see it as a sign of a bullish breakout, but it's a little more uncertain this time. Whatever it is, let's wait for the phase 1 breakout and buy and sell the correction, rather than just gambling in the direction. Some analysts think this is not the case, as the yearly pivot, which has been tested every year, is still around 20,000. And the monthly pivot, which has been tested 36 out of 38 of the last months. It still has not been tested, and yet the price is not rising, which will lead the next time frames into early harsh correction from going up beyond the realms of its comfortable growth rate. We think that it's not exactly an upside breakout, but we want to see what the retracement has to offer. That's it for today's video. We hope you enjoyed it. Please leave it a thumbs up, subscribe, and click that notification bell. Are you looking forward to another surprising run of Bitcoin, or do you foresee a further dip? Let us know in the comments below. Good luck and happy investing.